This is Mikhail Khazin at the microphone, and welcome to today's Economy, the Russian View. Today, we will cover a topic that I believe is extremely important. This topic is going to cross-cut the entire show. First, we have to go back into the 1930s and 1920s, and even the times earlier. I would like to remind you that in 1913, the Federal Reserve Act was signed into law. This was a fulfillment of the bankers' long-cherished dream, allowing them to create, or in simple words, print money in their own interest. This became possible because, as you need to know, the Federal Reserve System was and still is a private entity. To those of you who do not fully understand this, I recommend to look into the details of the Federal Reserve Act. We are not going to focus on the document itself because it is not that exciting. We just need to know that the Federal Reserve System has been privately owned. For the bankers, however, there was one problem remaining. The gold standard was still in place, so the bankers could not yet print money indiscriminately. Yet in the 1930s, during the Great Depression, the bankers discovered an instrument to acquire wealth on a truly massive scale. This instrument worked the following way. Imagine you were a banker with close connections to the Federal Reserve, and your goal was to buy a big business, let's say an industrial company. As we remember, in the 1930s, the American economy contracted by approximately 30 to 35% as a result of the 1930 to 1932 crisis, yet the other 70% remained. So, there were still plenty of businesses you might be interested in becoming the owner of. How could you actually buy such a business if it weren't for sale? This was simple. You reach out to the owners and offer them, for example, to start a price that was a double of the market value, then 2.5 times the value, then perhaps 3 times, up until the owners agreed to sell the business to you. Question number 1. Where would you get the money? In your case, it is easy to answer. You will get the money from the Federal Reserve. They could give you what I would call a fictitious loan on very favorable terms, meaning at a very low interest rate. And that's what you're going to pay for the business acquisition with. Well, how you're going to pay your loan off is a separate conversation. But the most important aspect is the next one. Under this scheme, you added the money printed out of thin air to the economy, which could have serious consequences. But this could be mitigated in a simple way, assuming you were still friends with the Federal Reserve. If you were, then the Federal Reserve could use certain macroeconomic strategies, for example, raising the reserve requirement for the banking system, or other methods to tighten the money supply in the rest of the economy by the amount that was issued to you, so the total money supply would remain unchanged. From the standpoint of economy, not finance, but economy, by doing this, the financial system would in fact introduce a special tax on the entire economy to cover the amount issued to a specific person for a purpose of acquiring a specific business. Therefore, in the 1930s, the Federal Reserve became an institution capable of imposing a private tax on the national economy in favor of a narrow group of beneficiaries. Although this scheme worked well, it could only be used infrequently, because otherwise this would be noticeable. There was also a whole set of nuances that precluded a broad application of this method. Moreover, a new alternative mechanism to control the financial system was also invented. This mechanism was introduced by Franklin Roosevelt and his advisor Bernard Baruch, and I'm going to explain how it worked. In 1933, when Roosevelt took office, the US federal budget was roughly equal to the total value of assets of one of the top 10 richest families in America. Of course, the federal budget had a high operational value because it was already in the form of cash, whereas the assets of one of the richest families were not all in cash. Yet there was always an option to borrow against one's assets. Still, and once again, the federal budget was roughly as large as the net worth of one of the top 10 richest families in America. By contrast, in 1945, when Roosevelt's presidency ended, the federal budget was equal to the net worth of the top 10 richest families combined. Now I'm going to translate this into the common language. By the beginning of the 1940s, Barack could elevate any business owner's family in America to the level of the richest ones, for example, by providing government contracts or subsidies. And if done carefully, over the course of 2 to 3 years, this could go easily without even burdening the federal budget that much. This was the principal economic outcome Roosevelt achieved. He made the government the most powerful player in the economy. The bankers, of course, did not like this new setup. For the reasons mentioned earlier, they could not print that much money to change the situation either. Also, the bankers were physically restricted because, based on the laws of that time, branching of US banks was a subject of strict regulations. It would take many years before banks would be allowed to open one branch, and many more years, in fact decades, before all the branching restrictions would be abolished. Consequently, back in the early 1940s, the bankers' ability to exercise their power over the economy was limited. Soon, however, they would find a new solution. In 1944, at the Bretton Woods Conference, a new global economic model was adopted based on which the US dollar would become the world's reserve currency. Theoretically, or I would better say formally, due to the persistent demands by the UK delegation, the reserve status was also granted to the British pound. Very soon, however, the British themselves opted not to maintain the gold standard of their currency because at that point Winston Churchill was already actively deconstructing the British Empire. This topic is described in depth in my book Recollections of the Future, so we're not going to discuss it here. Let's go back to America. As a result of the Bretton Woods, the bankers acquired the ability to create money on a virtually unlimited scale to supply US dollars for external, meaning outside of the United States, operations. President Roosevelt was no longer needed in what the economy had become, so he peacefully died in 1945. There is a hypothesis that he was actually murdered, but I'm not going to dig into conspiracy theories here because our main focus is the economy. Next question is why the money was printed, or better, what was the money backed by? The money was printed to capitalize assets located outside of the United States and was backed by those assets. In other words, the new dollars were issued to capitalize foreign assets and to be used for those assets' operations. Consequently, this allowed branching of US banks internationally. Eventually, such branches would appear in most major cities around the world. And at that point, the branching restrictions inside of the United States would be lifted as well. This isn't about branching, however. The most important thing for us to understand is that the entire Bretton Woods system is based on the idea of capitalizing foreign assets in US dollars. From this perspective, an economic boom of the 1990s, the Clinton's era, was caused by creating money to capitalize assets of the former USSR. All our natural resources were capitalized in dollars, and since then, the main profits have been generated in the US financial system. We, meaning Russia, only make profits by selling the commodities themselves, the oil, the gas, and even this is a subject of restrictions. Here I'm not talking about any sanctions. I'm describing how the global financial system operates under normal conditions. Anyway, from the banker's perspective, everything was great, up until one day it turned out that the system ran out of room for expansion and no new assets could be found. Anything that could be capitalized had already been capitalized. Despite the lack of new assets, the money printing had to be continued to maintain the population living standard, primarily in the Western countries. The population wasn't and still isn't ready for their living standard to go down. Back during the times of Cold War, the West had to demonstrate higher living standards compared to the former socialist camp. Next, China came into play. Now, as the economic crisis sets in, the struggle for power intensified within the capitalist system itself. And because winning elections is still important, one may not allow the living standard to go down too much, even though the population's been slowly prepared to accept a drop in the quality of life. I would like to draw your attention to the fact that modern policies, especially those targeting young people, are designed to discourage them from owning property, or broadly, physical assets. It sounds as such: hey, you don't need to own a house anymore. You don't need to own a car. You need to own nothing. The logic of the old middle class of the 1950s and 1960s, according to which one should own a car and a house, has been deliberately discredited. Why would you own a house if you can rent instead and change your choices of where to live at any moment, and pick another place that you like more, either around here or elsewhere? Here is the truth behind this. To buy a house, you need to put down a significant amount of money that you first need to save. But salaries have already decreased, and many of them no longer include this component, the amount you're supposed to save as your down payment. But the salary component that allows people to rent is still there. I would like you to pay attention to this process. Somebody may say this: well, people still take on mortgages and buy houses. That is true, but there are two key differences in this process compared to what it used to be. First, the interest rates are higher, so fewer people are able to take mortgages. Second, over time, the payments have made a higher and higher percentage of household income. Also, you need to keep in mind that this process is not instantaneous. It is slow. Very slowly, mortgages become less and less affordable. The ideal end goal of this trend is to promote communal living, in which 2 or 3 young people share the same apartment, or even a studio, a small one. Now we're getting to the most interesting aspect of our analysis. Soon as the dollar-based financial system became truly global, very quickly, in many countries, governmental institutions, ranging from intelligence services to political organizations, merged with the system and became part of it. In other words, as of today, the United States of America projects 90% of its international influence via the dollar, the currency of the global financial networks. This could be fine if it weren't for one caveat. If democracy is defined as the power of Democrats, then liberalism is certainly the power of bankers. Once the bankers acquired this power across the entire world, they started to change official governmental ideology to what meets their needs, meaning making the ideology liberal. The worst thing of all, that at some point the bankers also began to transform the entire economic system to make sure it fits liberal templates. I would like to emphasize that here I am talking about modern political liberalism, which is principally different from philosophical liberalism, definition of which you can find in most dictionaries. Yesterday, I had a chance to attend a large corporate event where this modern political liberalism manifested itself very clearly. At some point, one of the participants started to explain to me that they were mainstream, commonly accepted economic standards that I had to stick to. I said that this was the definition of liberal totalitarianism, according to which any phrase that contradicts the canonical norms of political liberalism is unacceptable, and the author of such a phrase needs to be destroyed. So far, the entire economic model has been rebuilt worldwide to ensure compliance with the norms of liberal totalitarianism. Thus, there are some interesting things for us to discover. For example, managers educated according to the standards of liberal totalitarianism are called effective managers. The most important goal of any effective manager is to maximize financial profits. For instance, if such a manager was in charge of a factory, He or she absolutely does not care whether the factory would work or not, survive or not, or whether the people would have jobs or not. Effective managers care about none of this. If the jobs, however, have to be there, they can be drawn on paper. That is how the US Bureau of Labor Statistics manipulated the jobs reports by adding 800,000 plus jobs that had never existed. I analyzed this story in great detail in macroeconomic reviews posted by Khazin Foundation for Economic Research, first in March 2024 when the problem was suspected, and then again in September when the issue was officially acknowledged. Anyway, both of the reviews are older than 90 days, meaning they are free for anyone to access and available in Russian and English at fondmx.pro. The Federal Reserve Bank of Philadelphia was the first one to mention that the number of newly created jobs had been overestimated by a big margin. If my memory serves me well, this was in March this year. Next, in September, I shared the link to the Department of Labor website, where they admitted that they simply put on paper the jobs that had never existed. So, in summary, when everyone understood that the global dollar-based system could not be expanded any further, yet the demand for new dollars continued to rise, it became clear that new money would still be issued. But from this point forward, the bankers would do so at the expense of something or someone. It turned out that it was the country itself, the United States of America, that would pay for it. How exactly the United States has paid for running the global financial system can be easily seen by looking at how the US share of the global economy has changed over time. In 1944, when all of this started, the United States share in the world's economy was 52%, meaning that the American economic output was greater than the output of the rest of the world combined. As of now, based on the most recent assessment by the World Bank and International Monetary Fund that were published literally 2 months ago, the US share in the world's economy for the first time in history dropped below 15% in terms of purchasing power parity. This is consistent with my own estimate from 1 year ago. Then I said that it was somewhere between 14 and 18%. So today, it is officially less than 15%. Now, it is time to say yet another thing I have already said a number of times. Still, I believe it is worth repeating because this is the key. Specifically, on November 4th, 2014, the US midterm elections unexpectedly brought phenomenal victories for the Republican Party. At the same time, from November 3rd to November 7th, 2014, the Dartmouth Conference was held in Dayton, Ohio, and I had the pleasure of attending. After the election results were announced, most of us, the presenters, both American and Russian, ended up discussing them. Then I was given a chance to share my view. I explained that by that time already, 2 potential scenarios for US future had become clear. Based on the first scenario, the United States would focus on saving the global dollar-based Bretton Woods system at the expense of completely losing the domestic real sector. If this scenario was played out, the United States would not be able to hold its position of the world's leading country, because for this role, controlling the global money is not enough. The country would also need a substantial force component, first and foremost, the military force, which requires a strong domestic industrial base. According to the second scenario, the United States would put all its effort into saving and recovering the real sector, meaning its own productive industrial economy, and accept the inevitable demise of the global financial system. Why is that? Because today, it is impossible to invest into manufacturing sector as its profitability is lower than that of the financial sector. This is how the entire system was designed, to make sure the profits in the industrial sector are lower than the profits of the financial markets. That is why today's effective managers would never invest money into US manufacturing, but managers with a different type of mentality are long gone. We can see the evidence of how the current system negatively affects the real sector by looking, for instance, at all major defense projects in the United States over the last 25 years. Few dozens of such projects has been launched, and only one of them materialized in a final product. I'm talking about F-35 military jet. Still, this aircraft raises a lot of questions in regards to how much it actually meets the original expectations. Next, while still at the conference, I also added that American people associated the first of the two scenarios, saving the global financial system, with the Democratic Party, and they associated the second scenario, saving America, with the Republican Party. This association was not exactly right at the moment, but it was close enough. This was the collective unconscious. So the people voted for the Republican Party because they wanted to save America. Next, I said that the results of midterm elections demonstrated that this movement for the industrial recovery could put forward their candidate for the upcoming 2016 presidential elections, and such a candidate would have a chance of winning. I would like to remind you that several months after I said this, Donald Trump entered the presidential race with his famous slogan, "Make America Great Again," which, in economic sense, means recover American industries. And as we know, he ultimately won. Next, the most interesting things started to happen. Why am I saying this? Because as we already determined, in order to actually recover American manufacturing, the global dollar-based financial system had to be demolished. This, however, did not happen. Moreover, Trump ended up in a conundrum because what kind of American greatness could we talk about if we liquidate the dollar-based global finance? The United States had no other mechanism to control the world because, for example, the United States military, generally speaking, were already starting to retreat. Of course, their retreat under Trump wasn't as active as it would be later during the Biden's era. Just look at the Afghanistan withdrawal alone. But still, on the other hand, investments into the real sector were desperately needed, and Trump put titanic efforts into making this happen. He really created a lot of jobs, yet during his first term, he failed to achieve the main goal. Today, I'm not going to discuss the scale of falsifications of the 2020 elections. What is important for us to conclude is that Trump lost the war. He failed to accomplish the task that he took upon himself, the task of recovering the American national economy. Those of you who read our macroeconomic reviews on a regular basis know how depressing the situation in the American economy has been, especially in the industrial sector. Anyway, next came Biden, then the COVID pandemic ended, but the situation in the economy got even worse. Since the fall of 2021, the US economy has been in continuous decline. This could be seen not only from our reviews, but also from other sources. For example, reports of Larry Summers, who said that actual inflation in the United States was 8%, not 3% as it had been officially reported. So Summers also agreed that the economy has been declining since the fall of 2021, even though, based on our calculations, it has been declining faster. The main focus of today, however, is not the rate of the economic contraction, but the base contradiction, the base problem of today's American economic logic, which I'm going to define right now. On the one hand, the main instrument of global power is the dollar-based financial system. On the other hand, this exact global financial system has to be liquidated in order to recover the US national economy. Otherwise, investments will never reach the industrial sector. What happened next? Next, the special military operation in Ukraine started, which unexpectedly demonstrated something outstanding to the United States. For the United States of America, it became clear that the United States could not recover manufacturing at home based on the domestic consumer markets alone. This could have been possible between 2017 and 2020, during Trump's first term. If back then Trump had dared to break the global financial system, he would have had a chance to rescue the US economy based on the internal consumer markets alone. Now, this opportunity is gone, meaning the American economy is not recoverable based on its domestic markets only. Why? Because after the COVID pandemic and subsequent adoption of the model of supporting consumer purchasing power through the federal budget by so-called stimulus checks, all internal markets are oversaturated with cheap goods from Southeast Asia, primarily from China. As of today, US domestic production of consumer goods is virtually non-existent. If you plan to recover this type of manufacturing as Trump wanted to do in 2017, by the way, has been 8 years already. Anyway, in such a case, you have to allow a precipitous drop in the population living standard. In other words, you'll have to tell American people that they will buy not the cheap Chinese goods, many of which are, by the way, of good quality. Instead, Americans will have to buy US-made goods, which are very likely not to be of the same quality, especially initially, but definitely they're going to be 2 to 3 times more expensive, at least at the beginning. Just like every time you start something new, at first the quality isn't there, because it takes some time to sort out certain technical issues. However, the living standard in the United States has already been dropping. Look at this not so pretty picture on the screen. Do you really want to tell the people that their living standard is going to drop down even further? You won't be able to tell this to American people. Moreover, if the living standard drops, the consumer purchasing power will drop as well, which is obviously not good for the economic recovery. So what could be done in this situation? There is a potential solution. I'm not going to claim that I'm the one who actually invented this, but I was among the first ones to mention it. Here is the main thing. An external market has to be found, a very powerful one, with a minimum population of 500 million or more. So these people should be willing to produce various consumer goods for the United States and sell them at approximately the same prices as the current US prices of Chinese imports, and simultaneously be willing to spend the money earned in the process to buy high technology products made in the United States. Where can such a market be found? Definitely not in India, not in Central or South America. For a simple reason, because the vast majority of the people over there work essentially for food. They're not paid enough, they're not paid competitive salaries. The only area of the world that has the markets I described, the markets the United States absolutely needs to recover its national economy, is Southeast Asia, a group of countries located between China and Australia. These countries are already preparing to sell their consumer goods to the United States, but unfortunately, as of now, they buy high technology products from China. In other words, the United States of America has to start a war for the markets. The US has to forbid sales of high-tech goods made in China to the countries of Southeast Asia. Next, aiming for the consumer base in Southeast Asia, the US has to start or ramp up production of American high-technology products, meaning those made domestically in the United States. In a simplified way, for example, the US should start selling US-made iPhones to Southeast Asia. It is a very simplified way of looking into it. Of course, at first, the populations of South Asian countries will not be that happy because now they will have to buy more expensive American-made goods, but the US has several options to offer better deals. For instance, America can start buying the goods from Southeast Asia at slightly higher prices compared to those from China. Also, a better share of profits can be offered to the South Asian companies. Last but not least, America can issue some money to increase capitalization of the newly established Southeast Asian companies and simultaneously decrease the capitalization of Chinese ones. These are technical questions, which make sense under one condition. The United States has to push China downhill very firmly, and China, of course, will not like this. I would like to point out that US is slowly working on this. US sanctions against Russian Gazprom Bank is a good example. This was not about Gazprom Bank itself, but about the fact that the bank dared to issue Chinese Union Pay cards. If China had considered itself to be a power equal to the United States, it would have stood up for its own interest by saying that the Union Pay was a Chinese card denominated in yuans, and the United States had no business to dictate China what to do. Instead, China swallowed its pride and complied with American sanctioning request. Based on this episode, the US leadership concluded that the task of conquering the markets of Southeast Asia from China can be accomplished. At the same time, we see that Trump, who does not seem to have a deep understanding of economic questions, starts to contradict himself. Again, he's starting to say that the global power of dollar has to be preserved. Well, if this is the goal, then America loses the chance to recover domestic manufacturing. And as we see, the US industries were not recovering. Over the last year, all the efforts of the Biden administration to invest money into at least the defense sector failed to produce any significant result. I would repeat this once again. From the standpoint of economy and finance, the liberal norms of economic management disallow investments into the industrial sector, even when the political or geopolitical situation requires them. This is the real problem Trump is going to face. It is not clear how to solve it. Next, if you Americans are talking about retaining maximum control over the global financial system, then why are you guys kicking out of the system the two powerful countries, Iran and Russia? Obviously, this is another internal contradiction, a setup against your own interests. So those opposing movements, the two scenarios I described almost exactly 10 years ago in 2014, continue to manifest as contradictions inside the system of US economic management. It is still not clear how to fix this. What we, Russia, and also China have been doing actually plays in favor of the Trump's plan. A number of politicians in America, such as Rand Paul and his father Ron Paul, who is now retired, supported dissolution of the Bretton Woods system. So America needs to do is essentially one thing: list the countries that have to stop using yuan and the Union Pay. Yet no, this was not what's being done. Instead, America insisted that Russia had to be separated from the Union Pay. All these contradictions inside the United States are very complex for one simple reason. All economic managers, not just in America, but in all Western countries, and even a significant percentage of them in Russia over the last years, all of them have been educated in the framework of the liberal economic model. As a result, they understand money. They do not understand the key, what the value added is. Therefore, as a result of money creation and redistribution of profits by purely financial mechanisms, the mechanisms totally unrelated to production, the entire world's economy has been made the opposite of profitable. It is loss making. How does this even work? If you own a factory, then your main goal is to invest all available money into financial markets where speculative operations generate maximum profits, yet keep the production and sales to some extent, because as long as you produce and sell, the company's capitalization continues to grow. And capitalization means financial assets, and that's what you need to play the financial markets with. So consequently, the logic is the following. You should use borrowed money for all your investments and all your operational liquidity. Then keep your production, which generates losses, but ideally minimal losses, and these losses should be offset by growing capitalization. From the common sense perspective, this is delusional. But what can you do? I would like to add that if, for instance, a business borrows $2 billion, then whether this is good or bad depends on how you see it. From the common sense perspective, it depends where the money goes, how you spend it. If you waste it, that's a pure loss. If you invest it into something productive, then it's a great idea. However, from the standpoint of modern economy, borrowing the 2 billion is always good, no matter what, because these 2 billion immediately add to the value of your business assets, the financial assets, of course. So your capitalization is going to be up, and then you can continue borrowing even more money. Therefore, from the classical accounting perspective, the entire global economy is loss-making, but the losses are balanced by constant refinancing of the revolving debt, once you can borrow against your growing capitalization. Now imagine two processes happening at the same time. First, the consumer demand is dropping, and we see this happening by partly this is compensated by the government underreporting the inflation. And because of that, while the actual demand is contracting, in nominative terms, it might even be slightly going up, which allows the capitalization to grow. The capitalization is growing faster than the economy in nominative terms. So you can continue borrowing money. So your debt is going more and more up. Second, eventually you reach a point when the demand is dropping in nominative terms already. And simultaneously, either the financial markets start to collapse or the inflation is climbing, which from the standpoint of finance is the same. Meaning either the value of your assets is decreasing but the prices are stable, or the value of the assets is stable in nominative terms but the inflation is going up. What can you do in this situation? In this situation, the system starts to crumble. This is what we are going to face most likely at some point during the next year, meaning 2025. In such a case, it would not be possible to salvage the global dollar-based financial system. In such a case, what will be the main economic players in the world? The logic that we will have China-America, an alliance of China and the US, is no longer valid because we understood that China is not a match to the United States. The United States can cancel the Union Pay and other Chinese things at any second. Then what's left? Only the countries that exited, I would better say, or forced out the dollar-based system. Iran, Russia, and actually North Korea. Also India, which is a self-sufficient market, so any all-Indian financial network, once created, will have 1.5 billion customers. China by itself can do the same thing too. As we established, the United States has to liquidate the dollar-based global financial network to recover its national economy. Without doing this, the US is not only going to lose its status as the leading power, I'm afraid it won't even be among the top 5 countries. Because without the industrial economy, what other means does the US have to rule the world? Certainly the United States has a very powerful navy, but how much longer will the ships, including the carriers, remain operational without the industrial capacity to maintain and repair them? Yes, the United States still has enough resources for one big war, but this has to be the war for the markets of Southeast Asia. So let's say the United States becomes the center of one of the 4 future currency zones. So what are the other 3? India, then China with its Union Pay, and we, Russia, with our mere financial network. That's it. No one else is even close. The European Union has to be dismissed due to its complete lack of independent political capacity. The EU does not even have its own card, by the way. Of course, they can try to make one, but it will not work as the European Union starts falling apart. These are the 4 future currency zones. It is not clear how China, with its colossal internal subsidies, is going to survive this process. Unfortunately, it is not yet clear how the United States will stay afloat. We need to understand that today, the negative processes, the decline in the American economy, are compensated by imports. But let's keep in mind that the United States is not Russia. Russia is a resource exporting country, so we can afford imports because of our exports, even though we definitely need to recover our own industrial production to become less dependent on imports. But what is the United States going to export? For the last decades, they have exported the dollar. But then the dollar-based financial system is dissolved. What is the United States going to export to support its imports? Of course, there are still the 2 big neighboring countries, Canada and Mexico, which resources can help the United States. I still hope the United States will survive this crisis. But to do so, they absolutely have to allow investments into the domestic real sector. But what if they don't have time? What if this is too late? Economic decline often accelerates at a certain point and turns into a collapse. This is indeed a huge problem in the Western economy. For the very long time, the West has been solving its problems by using the global dollar-based system, the Bretton Woods, as the leverage to rule the world. But the same system effectively forbids recovery of the domestic manufacturing. I do not know yet how to exit this situation. The solution I mentioned, the conquest of the South Asian markets, hasn't started yet because it will trigger many political problems. We see how Great Britain deliberately puts the spokes into the United States wheels. I'm not going to discuss this here. That is what my subscription Telegram channel is for. By the way, in part, we touched upon this topic together with Professor Yevstafiev in our previous Economy, the Russian View. For the United States, strategy is the key. The story with the Union Pay and the Gazprom Bank showed that China can retreat if pushed hard. Maybe this is a result of what Great Britain, specifically the Moore and Burns group, did to China. It seems like they advised China to get back into the passive posture, hoping to make Trump and Putin active, based on the concept of the three forces. If there are three forces and two of them are active and fighting each other, the third, the passive one, wins. But neither Trump nor Putin are trying to be active. What is active is Britain, once again the infamous Moore and Burns group, and this is going to cost them a lot. Since the group is associated with China, China is de facto losing even though it isn't doing much. If China wants to win, it has to at least defend what it has. For instance, its union pay system, but China did not do it. I do not know yet how each country is going to cope with this crisis. I do not know what's going to happen to China when the global financial system collapses, either through high inflation in the United States or through a collapse of the global financial markets. I do not know how China is going to survive because Chinese economy is vitally dependent on exports to the United States. China will face a multitude of serious problems. I have no idea how they're going to solve them. Last year, it seems to me that the summer of 2024 would be a critical point by which the United States would have to start the operation of taking over the markets of Southeast Asia. Otherwise, that would be too late. Obviously, we're past that point, and the United States did not start it. Yet, because China is so passive, I hope America still has time. Maybe the window of opportunity is actually longer. The first thing the United States has to do is to get their governmental operations back in order. Next, do something to stop Great Britain from undermining the US interests. I'm not sure how exactly they're going to do because it depends on the US political elites, and this is not my area of expertise. Still, I believe that for America, conquering the markets of Southeast Asia is the way to go. In conclusion, the economic contradictions set in place in 1944 still remain there, and they define today's crisis. Solving these contradictions is the only way for the United States to exit the dead end. At the same time, psychologically, it is extremely difficult to get rid of the global role of the dollar because this automatically ends the US status as one and the only superpower and brings America down to the orbit with the other three big geopolitical sure players and two potential extra players, one of which is in decline, Britain, and the other one, Iran, is on the rise. Once again, those interested to know the professional level analysis, please subscribe to my macroeconomic reviews. By the way, the review from the last Saturday shows details how the US government
falsifies its economic data. And those interested in political analysis, please subscribe to my Telegram channel. Our time is ending now. Thank you for listening. This was Mikhail Khazin and Economy, the Russian View. Thank you. Goodbye.